Street rallied, sending the benchmark indexes to all-time highs. Stocks soared after the Federal Reserve expressed enough confidence in the labor market to begin tapering asset purchases. Starting in January, the Fed will trim its monthly bond purchases to $75 billion, down from $85 billion. The Fed is unwinding unprecedented stimulus that was put in place to help the economy recover from the worst recession since the 1930s. The Fed reinforced assurances that it's a long way from raising borrowing costs. Anastasia Amoroso, global market strategist at JP Morgan Funds, says the stock market can continue its advance.
There's something.
Okay, I think that sums it up there, folks. It's a deal. Mr. Intermarket Analysis bringing you a review of the FTSE going into Thursday's trading, the 19th of December 2013. Okay. Interesting day. Fundamentally reacted exactly the opposite to what I expected, or opposite to what I think a lot of people expected, and certainly quite a strange day, very strange day indeed. Okay, so where do I start? Where do I finish? Okay, there's a lot of areas to cover today, so I'll try and be brief. Okay, so basically, as you can just see there, I've got Bloomberg Radio on in the background. Just basically, Mr. Bernanke obviously went for the taper, which I already explained. That's what I was more or less expecting to a certain extent, until the market had obviously sold off, and then it was positioned in a way where there was no tapering. So overall, obviously, given the fact that inflation was ticking higher, employment check, obviously growth check, etc., and obviously a lot of well-respected analysts, not all of them, a lot of them are pretty average, but the ones that I follow are obviously above average, and they did state that taper was going to happen, although Ashraf Laidi said no taper, and Kathy Leon obviously quite spot on with the taper. Okay, so it's not about whether it's taper or not taper. It's all noise at the end of the day. In reality, it's the reaction in the market and how we expect the market to react. Obviously observing our intermarket analysis variables, observing TAFA, etc. So given the fact that obviously Fed tapering or not tapering was a wild card, okay, so obviously you position yourself accordingly based on whatever you can observe in the markets at the time. Obviously I was short, as you already know, with my midday video, the FTSE today, or should I say tomorrow, or should I say it's actually not tomorrow, yesterday, sorry, it's 12:03 now. Okay, so basically so yes, you know, I was short. I was looking for the markets to go down. Obviously, Nasdaq, I call the market for short on the Nasdaq, which it did. The HNS played out, although I got out slightly too early there. But that's just the way in which the market works. Obviously, the FTSE as well got out slightly a bit too early on that as well. But basically, the summation was this: that obviously, given the fact that Mr. Carney has concerns regarding the Euro GBP. Also given the fact that the employment data obviously ticked higher, obviously caused sterling to rally. Sterling rallies, obviously we all know that hurts exports. Okay, so Mr. Carney needs Euro GBP higher, not lower, remember. Okay, and that's the reason why I was short, obviously because it's all about the Euro GBP. Now sterling obviously has moved higher given the fact that employment rate has ticked lower. Okay, and obviously the FTSE suffered accordingly, so hence the reason why there was a bearish bias. But again, like I said, the wild card was tapering or non-tapering. So and the wild card basically was as expected, the fact that we got tapering, like I expected during the day. So so we got tapering in the end, and the markets were technically supposed to sell off, but they didn't. They actually short squeezed higher, and that was the that's a tricky bit. Okay, that's a tricky bit. That's what we have to try and sort of analyze, dissect, and see exactly what the market wants to do. Okay, so that's basically what we have to dissect. So so the conclusion is obviously tapering is here, US dollar positive, negative for commodities markets, hence the reason why gold is down, hence the reason why FTSE will be under pressure tomorrow, as you know. Okay, obviously oil sector will certainly come into some type of resistance there as well, and that's basically the conclusion from that, folks. Okay, so got obviously US dollar higher, no more Kool-Aid, or well, there is Kool-Aid, but obviously it's been reduced now, and going forward it will be reduced. So easy money is obviously the days of easy money are behind us now, and it'll be interesting to see how the markets react. Now the markets are going to react based on data now. It will be all based on fundamentals, so the reaction going forward will be fundamentals, which again makes it easier to a large extent as well, given the fact that everybody does expect tapering. The most important chart really to observe at present is the US dollar index, and you have the inverted head and shoulders pattern which I showed you today. Okay, so obviously that's thrust higher now, and we should certainly move up, upward, onwards and upwards. Okay, so US dollar is certainly the trade to be in terms of long. Okay, so let's have a look now what's happening with regards to this market. Okay, market, let's have a look. So basically today, the reason why obviously I was bearish, given the video, etc, etc, we had a topping tail. Okay, the FTSE itself was struggling whilst all the rest of the indices were moving higher, and that's one of the reasons why I did close my shorts on the FTSE for plus 25, and obviously closed my Nasdaq shorts as well for around plus 25 as well. So because Europe was moving higher, Europe was looking strong, given the fact that obviously if you've got tapering, dollar rises, euro falls, and obviously that helps European exports. Okay, so bear that in mind. Okay, so topping tail on the FTSE. Why is the topping tail there? Mainly obviously given the fact that they more than likely did expect a mini taper, and obviously that hurts commodities. Now what's happening with commodities? Let's have a look at the CRB index. That's the most important index to watch if you're observing commodities. Okay, and here we go. CRB index is in the upper channel resistance. So given the fact that you got a stronger dollar now, upper channel resistance, this should technically go lower. Okay, so that's basically what we're looking for the FTSE. Okay, and a weekly chart, obviously you already know there's a H&S formation which I've discussed already, and looking for 6100 target on the downside, given the fact that we've got tapering, no more Kool-Aid, down we go. Okay, that's in the long run obviously. Okay, so let's have a look at the FTSE now. FTSE 10 minute. Okay, 10 minute chart, obviously we're in this bearish channel. Obviously the fact that the FTSE is now currently being quoted around the 6560 region now, so obviously all this has been negated to a large extent. But you know why I went long, why I went short on the FTSE. Obviously pretty self-evident there. H&S formation. Ooh, H&S formation. So 6526. What was it? 6575 was the target on the downside, and certainly got that on the downside. We certainly got that downside. Okay, so we've broken out of this bearish trend line here, coming down. Market's obviously thrust higher. We've even broken this potential 6530, given the fact it depends where the market opens obviously tomorrow. So you've got some resistance 6530. So you never know, Asian markets, I mean China has been weak anyway, relatively speaking, so China could sell off again, and obviously the FTSE could open at 6530. So but basically we've got resistance at 6570. Very hard for the market to really penetrate that move higher, given the fact that the dollar's obviously on the up and the commodities are into resistance. Okay, you've got resistance here at 6555, and then obviously resistance here at 6530. Now it's very unlikely we'll go to 6530 tomorrow. It depends where we gap up. So we can gap here, here. We could even gap up at 6525. Who knows? So it depends how the Asian markets react. So we'll just take that in our stride. Okay, so on the 10-minute chart. So let's have a look at this 60 minutes. Okay, 60 minutes is an interesting one, which I did explain. My thesis was that we basically we get mini tapering, and the market inverted head and shoulders pattern obviously fails to transpire, and we go lower. Okay, and that's exactly what happened here. It failed, and we sold off. Yeah, okay, but it seems to have held 75% or say 50% fib retracement support, and boom, off we went to the race. It was the right shoulder. Now the question is, will the inverted head and shoulders play out, given the fact that you've got strong dollar, which means obviously commodities weak, and going forward, that's the question. You see, that's the question. Is the US growth sustainable? Can it sustain itself? Is the demand there sufficient enough to drive commodities higher just based on higher demand? Questionable. Okay, questionable. So tricky one. Okay, so basically what inverted head and shoulders, as we know, like I said, you had the unfilled gap at 6600. That would only be filled if we had no taper, but now we have taper. Conundrum. Okay, how do you work that out? How do you work out the direction? Okay, so again, tricky. Okay, so obviously I'll have to see what the price action is tomorrow, see what how the Asian markets react, and then obviously trade accordingly. So it's going to be a tricky day tomorrow, but we'll see. Okay, like I said, the unfilled gap must close above, provided the neckline holds. Obviously, I will always be willing to shift my bias, but I won't be surprised if we retest that neckline at 6520, and then I'll decide whether or not it holds or breaks. So going forward, given the fact that the employment rate obviously is improved, okay, and sterling is higher, that doesn't bode well for exports. So the FTSE can't really gain any sort of traction here. Okay, so just bear that in mind. Unless Mr. Carney comes in and states that he has to intervene, etc., and then obviously tapering, and plus tapering as well. If tapering can subdue the sterling price of sterling, then obviously that obviously will help the FTSE as well. So again, like I said, there's a lot of questions, not enough answers at present, and let's give the market some time, and hopefully the answers we'll find them ourselves, okay, as we go along. So certainly a good test, okay. So with regards to that, so basically that's where we are right now. So resistance, obviously, given this trend line here, let me just see here, okay. So you got downward sloping trend line which goes back, okay, and you got 200 MA here as well, 6580. So very unlikely we'll break above that and close the gap, especially given the fact that we got a mini taper. That isn't a strong enough catalyst for the FTSE to propel higher. Okay, so bear that in mind. So down we go. We could potentially retest this line here at 56550. Again, like I said, I'll have to assess, see how that sort of pans out, and then obviously react accordingly. So that's basically it, folks. Okay, so risk on, risk off, wax on, wax off. Goodbye now.